morning, class. I'm J. Vincent P. Tobias, your instructor for today. The topic that I will teach to you is all about revenue from contract with customers. We have 5 learning objectives in our topic. Ito ang mga bagay na dapat nyong matutunan pagkatapos natin sa ating aralin. So una, state the 5 steps in the recognition of revenue. Next was to describe how performance obligations are identified in a contract. Then next, describe how the transaction price is allocated to the contract performance obligation. Followed by, state the timing of revenue recognition and its measurement. And lastly, state the presentation of contract with customers in the statement of financial position. Lahat ng mga ito ay tatalakayin natin sa aralin ngayong araw na ito. Bago natin simulan ang ating discussion tungkol sa ating topic, let's identify first what is income, revenue, contract, and customer. First, income is defined as increase in economic advantages during the accounting period in the form of inflow or asset enhancement or liability reduction that result in increasing equity, other than those attributable to contribution from equity participants. While revenue is money earned in the course of a company's normal operation. Parehas lang sila ng income na tumutukoy sa kita na pinagkaibaan lang nila ay ang revenue ay ang kabuang kita mula sa mga products or service ng kumpanya. Samantalang, ang income naman ay ang mga kita mula sa kabuang sahod, sweldo, tip, upa, interest, o dependa na natanggap para sa isang tiyak na yugto ng panahon. Ang contract is a written agreement between two or more parties that establish legal binding rights and duties. A contract can be written, oral, or inferred by a company's standard operating procedure. Nabubuo ang isang contract kapag may dalawa o higit pang tao na nagkasundo para sa iisang layunin. A customer is a party who has entered into a contract with the entity to get goods or service that are a result of entity's normal operation in exchange for money. Sila yung mga taong bumibili o tumatanggap ng mga produkto o serbisyo ng isang kumpanya. Sila ang nagbibigay buhay ng isang kumpanya upang magpatuloy ito sa susunod pang mga taon. Ngayon, natapos na natin natukoy ang mga salitang ito. Pag-usapan naman natin kung ano ang nakapaloob sa PFRS 15. The standard for reporting the nature, quantity, timing, and uncertainty of revenue and cash flows emanating from customers' contract are outlined in PFRS 15. It applies to contract with the client as the counterparty. Individual contracts with client are covered by PFRS 15. PFRS 15 may, however, be applied to a group of similar contracts as a particular expedient provided that the impact on the financial statement are not materially different when PFRS 15 is applied separately to each of the contracts within the group. May 4 na halimbawa na hindi pwedeng i-apply sa PFRS 15. Ito ay ang una, a lease contracts or PFRS 16. Pangalawa, insurance contract or PFRS 17 insurance contract. Pangatlo, financial instrument, and ang pang-apat, non-monetary exchange between entities in the same line of business. In revenue recognition, an entity applies 5 steps. Step 1, identify the contract with the customers. Step 2, identify the performance obligation in the contract. Step 3, determine the transaction price. Step 4, allocate the transaction price to the performance obligation in the contract. And lastly, step 5, recognize revenue when the entity satisfies a performance obligation. Pag-usapan natin ang Step 1. Step 1. Identify the contract with the customer. A contract with the customer is accounted for only when all of the following criteria are met. Una, the contracting parties have approved the contract and are committed to perform their respective obligation. Pangalawa, the entity can identify each party's rights regarding goods or service to be transferred. Pangatlo, the entity can identify the payment terms for goods or service to be transferred. Ang pang-apat, the contract has commercial substance. At ang panglima, the consideration in contract is probable of collection. No revenue is recognized on a contract does not meet the criteria. Kahit mayroon lang kahit isa sa mga nasabi ang hindi nakuha ng isang contract, hindi ito pwedeng i-recognize bilang revenue. Any consideration received from such contract is recognized as liability and recognized as revenue only when either of the following has occurred. Una, the contract has been terminated and consideration received is non-refundable. Pangalawa, the entity has no remaining obligation to transfer goods or service to the customer and all or substantially all of the consideration has been received and is non-refundable. Dumako naman tayo sa Step 2. Step 2. Identify the performance obligation in the contract. A contract includes promises to transfer good or service to the customers. Each promise to the transfer the following is a performance obligation to be accounted for separately. Una, a distinct good or service, or a distinct bundle of goods or service. Pangalawa, a series of distinct goods or service that are substantially the same and have the same pattern of transfer to the customers. A promised good or service is distinct if, una, the customer can benefit from the good or service either on its own or together with other resources that are readily available to the customer. Pangalawa, the promise to transfer in good or service is separately identifiable from other promises in the contract. A promised good or service that is not distinct is combined with other promised goods or service until a bundle of good or service that is distinct is identified. In some cases, this may result to treating all the promised goods or service in a contract as single performance obligation. Some examples of promised good or service. First, sale of goods produced by a manufacturing entity. Second, resale of goods purchased by a trading entity, example, a retailer. Pangatlo, resale of rights to goods or service purchased by an entity. Pang-apat, performing a contractually agreed upon task by a service-oriented entity. Panglima, constructing, manufacturing, or developing an asset on behalf of a customer and more. Punta naman tayo sa Step 3. Step 3. Determine the transaction price. The entity determines the transaction price because this is the amount of which revenue will be measured. The consideration may include fixed amounts, variable amounts, or both. So, what is transaction price? Transaction price is the amount of consideration an entity expects to receive for the transfer of goods or service to the customers. Ito ang halaga ng pagbabayad na inaasahan ng isang negosyo na karapat-dapat kapalit ng paglilipat ng mga ipinangakong produkto o serbisyo sa isang customer. Hindi kasama ang mga perang nakolekta sa ngalan ng ibang mga partido ay tinutukoy bilang presyo ng transaksyon. Pag-usapan naman natin ang Step 4. Step 4. Allocate the transaction price to the performance obligations. The transaction price is allocated to each performance obligation identified in a contract based on the relative stand-alone price of the distinct goods or service promised to be transferred. Stand-alone selling price is the price at which a promised good or service can be sold separately to a customer. If the stand-alone selling price is not directly determinable, it shall be estimated, maximizing the use of observable inputs and applying estimation methods consistently in similar circumstances. The following methods may be used to estimate the stand-alone selling price. So let's start with number 1. Adjusted market assessment approach. The entity evaluates the market where the goods or service are sold and estimates the price that a customer would be willing to pay for those goods or service. This may also include referring to a competitor's price for similar goods or service and adjusting those prices as necessary to reflect the entity's costs and margins. Pangalawa, expected cost plus a margin approach. The entity forecasts the expected cost of satisfying a performance obligation and then adds an appropriate margin. Pangatlo, residual approach. The stand-alone selling price of a good or service is the residual amount after deducting all the stand-alone selling price of other promised goods and service in the contract from the total transaction price. A combination of methods may be used if two or more goods or service have highly variable or uncertain stand-alone selling price. Dumako naman tayo sa panghuling step, ang step 5. Recognize revenue when the entity satisfies a performance obligation. Revenue is recognized when the entity satisfies performance obligation. It is measured at the amount of the transaction price allocated to be satisfied performance obligation. Satisfaction of performance obligations. A performance obligation is satisfied when the control over a promised good or service is transferred to the customer. Control is the ability to direct the use of and obtain substantially all of the economic benefits from an asset. It includes the ability to prevent others from obtaining those benefits. Control exists even if only momentarily when goods or service are received and used. Benefits include the potential cash inflows or savings in cash outflows that can be obtained directly or indirectly in many ways, such as by A. Using the asset to produce goods or provide service. B. Using the asset to enhance the value of other assets. C. Using the asset to settle liabilities or reduce expenses. D. Selling or exchanging the asset. E. Pledging the asset to secure a loan. And D. F. Holding the asset. The entity determines at the contract inception whether a performance obligation will be satisfied either first, over time, second, at a point in time. Performance obligation satisfied over time. Revenue from a performance obligation that is satisfied over time is recognized over time as the entity progresses towards the complete satisfaction of the obligation. A performance obligation is satisfied over time if one of the following criteria is met. Una, the customer simultaneously receives and consumes the benefits provided by entity's performance as the entity performs. Pangalawa, the entity's performance creates or enhances an asset, example, work in progress, that the customer controls as the asset is created or enhanced. Pangatlo, the entity's performance does not create an asset with an alternative use to the entity, and the entity has an enforceable right to payment for performance completed today. Examples of performance obligations satisfied over time. Una, rendering of cleaning, security, maintenance, and other similar service that are provided over a specific period of time and that the customer simultaneously receive and consume the related benefit as the entity performs. Pangalawa, construction of an asset such as building that the customer's control as the asset is constructed. Measuring progress towards complete satisfaction of a performance obligation. An entity recognizes revenue for each performance obligation satisfied over time by measuring the progress towards the complete satisfaction of that performance obligation. The entity uses a single method of measuring progress for each performance obligation satisfied over time and applies that method to remeasure its progress at the end of each reporting period. Appropriate methods of measuring progress include output methods and input methods. Under output methods, progress is measured based on direct measurements of the value of the goods or service transferred to date relative to the remaining goods or service promised under the contract. The disadvantage of this output method are that the output used to measure progress may not be directly observable and information required to apply them may be costly. Under input methods, progress is measured based on the efforts or inputs expended relative to the total expected inputs needed to fully satisfy a performance obligation. A weakness of input method is that there may not be a direct relationship between an entity inputs and the transfer of control of an asset to a customer. In such cases, the entity may need to adjust the inputs used in measurements. Changes in the measure of progress. The measure of progress is updated as circumstances change over time to reflect any changes in the outcome of the performance obligation. Such changes are accounted for as change in accounting estimates in accordance with past 8. Reasonable measure of progress. Revenue for performance obligation satisfied over time is recognized only if the progress towards the complete satisfaction of the performance obligation can be reasonably measured. If the outcome of a performance obligation cannot be reasonably measured, but the entity expects to recover the cost incurred in satisfying performance obligation, revenue is recognized only to the extent of cost incurred until such time that the outcome of the performance obligation can be reasonably measured. Performance obligation satisfied at a point in time. A performance obligation that is not satisfied over time is presumed to be satisfied at a point in time. Revenue from a performance obligation that is satisfied at a point in time is recognized when the performance obligation is satisfied. The entity considers the following indicators of transfer of controls when determining the point in time at which the promised good or service is transferred to the customers. Una, the entity has a present right to payment for the asset. Pangalawa, the customer has legal title to the asset. However, the entity is not precluded from transferring control of an asset to the customer if the entity retains the legal title solely to protect the collectibility of the transaction price. In this case, revenue may nevertheless be recognized. Pangatlo, the entity has transferred physical possession of the asset. However, physical possession may not coincide with control of an asset if the sale is subject to a reprise agreement or the sale is in fact a consignment agreement. Conversely, in a bill and hold arrangement, control may be transferred to the customer even though the entity retains physical possession of the asset. Pang-apat, the customer has a significant risk and rewards of ownership of the asset. Pang-lima, the customer has accepted the asset. Examples of performance obligation satisfied at a point in time. Una dyan, rendering of installation, one-time repair, and similar service that the customer obtains the related benefits only after the service have been completely rendered. Pangalawa, sale of asset for which the customer obtains control of only after the asset is transferred. Contract cost. Contract costs include incremental cost of obtaining a contract and cost to fulfill a contract. Incremental cost of obtaining a contract are costs incurred in obtaining a contract with a customer that the entity would not have incurred had the contract not been obtained. These costs are recognized as asset if they are expected to be recovered. However, a partially expedient that are expensed when incurred if the expected amortization period of the asset is 1 year or less. Costs that would have been incurred regardless of whether the contract is obtained are expensed, unless they are explicitly chargeable to the customer. Pangalawa, customer to fulfill a contract. Costs incurred in fulfilling a contract that are within the scope of other standards are accounted for in accordance with those standards. Costs incurred in fulfilling a contract that are outside the scope of other standards are recognized as asset if all of the following criteria are met. Una sa lahat, the costs are directly related to a contract or specifically identifiable anticipated contract. Pangalawa, the costs generate or enhance resources that will be used in satisfying performance obligation in the future. Pangatlo, the costs are expected to be recovered. The following costs are expensed when incurred. First, general and administrative costs, unless those costs are explicitly chargeable to the customer under the contract. Second, cost of wasted material, labor, or other resources to fulfill the contract that were not reflected in the price of the contract. Third, costs that relate to the satisfied or partially satisfied performance obligation in the contract. Example, costs that relate to past performance. And fourth, costs for the which an entity cannot distinguish whether the costs relate to unsatisfied performance obligation or the satisfied or partially satisfied performance obligation. Amortization and impairment. Contract costs that are recognized as asset are amortized on a systematic basis that is consistent with the transfer of the related goods or service to the customer. The amortization is updated for any significant change in the expected timing of transfer of the related goods or service to the customer. Such a change is accounted for as a change in accounting estimate in accordance with past 8. Impairment loss is recognized in profit or loss as follows. First, recognize impairment loss in accordance with another standard. Example, PAS 2, PAS 16, and PAS 38. Pangalawa, next, recognize impairment loss in accordance with PFRS 15, which is the excess of the asset carrying amount over 1. The remaining amount of consideration that the entity expects to receive in exchange for the goods or service to which the asset relate, less. Pangalawa, the costs that relate directly to providing those goods or service and that have not been recognized as expense. C. Lastly, the resulting carrying amount after applying step 2 is included in the cash generating unit to which the asset belong for the purpose of applying past 36 impairment of asset to that CGU. Profit or loss is recorded once the impairment is reversed. However, the reversal should not result in a rise in the asset carrying value over the amount that would have been determined, net of amortization, if no impairment loss had previously been recognized. That's all for our selected topic entitled Revenue from Contract with Customers. I hope you learned something in my discussion and understand the lesson that I taught to you. Nagpapasalamat ako sa lahat ng mga nakinig ng ating talakayan sa nakalipas na minuto. May iwan lang ako na isang sa inyong quote. May magandang kinabukasan ang taong may pinag-aralan. Ngunit, hindi sa taas ng edukasyon masusukat ang pagkatao. Mababa man ang pinag-aralan mo, pero kung marunong kang rumespeto sa kapwa mo, daig mo pa ang isang edukado. Ito ang aking final output para sa paksa na pinamagatang Principle and Method in Teaching Accounting. Muli, ako si J. Vincent P. Tobias, ang inyong instructor. Thank you very much for watching. Hopefully you enjoy my video that I made based on what I learned in this subject. Have a nice day or evening to everyone. Class dismissed.